Welcome to the Stocks with Josh show. Stock Josh family, the holidays are around the corner and the markets are basically tipping off the edge of a market move that really began back on October 13th. And in the last 45 days, the S&P 500 has actually gone down from a low of around 30% plus to just being down 20% from its all-time highs. But that's not really reflective of a lot of people's portfolios. A lot of people have portfolios that are 50, 60, 70% down on the S&P 500, NASDAQ, the Dow. I don't want anybody to feel beat up, but if you guys were invested 100% in the SPY, which is an ETF on the S&P 500, you guys would only be down in your overall portfolio just 20%. And that would actually be the same with the VOO, which is a Vanguard S&P 500 ETF. It's just like the SPY. If you had bought just the VOO, you'd only be down 20% as of this last Friday. So ETFs are a way to be diversified in your investments. They basically protect you from being stuck in a single bad performing stock or even a bad industry. Now, as my friend Keenan Grace famously says, if you can't handle the heat, then stay out of the kitchen and invest in an index fund. And I'm going to tell you that's actually really good advice for many people to begin their investment journey with one of those index funds, just the VOO or the SPY. And they commit themselves after that to learn how to invest, learn like a pro. If you follow this page, you know that we patiently waited for the SQQQ to hit our $39 range, as well as the SPX to hit around the $18 range. Those are inverse ETFs that go up when the NASDAQ and the S&P 500 go down. On the SQQQ, I'm up $12 on my entry price. And on the SPXS, I'm up $4.50. Some people have asked me, Josh, why don't you play the Dow short inverse ETF, the SDOW, SDOW? It's simple because I'm focusing my money and I'm focusing tracking and charting just one or two swing trades. I don't want to be overly spread out. I can't master the movement of every single chart, but the SDOW is a very good way of hedging long positions that you might have in the Dow. Basically, you make money off of the markets when they fall in these inverse ETFs. So 20% down. Under 20% isn't even classified as a crash. A lot of people would say, Josh, my portfolio has crashed. Well, the overall market is really just looking at a 20% down, which is actually considered a market correction. Anything below 20% is a market correction. Anything greater than 20%, well, that's more of a crash. And over the last couple of weeks, from November 8th to December 15th, we were actually above a 20% down. So we weren't even 20%. So in that time frame, we were not even in a crash. We were just in a correction. And a lot of people have been saying that the crash may come in 2023, maybe even as far as 2024, depending on how bad this recession is. I don't have that bearish of a view, and I'm not even trying to look that far down the road, but we are not in a big crash territory when the S&P 500 is only 20% down for the year. But the big question is, Josh, where are things going from here? What are the markets going to do next? What am I looking at? What do I think is going to happen? Well, I'm going to break that down. Plus, I'm going to talk to you guys about Tesla. Remember, anything I say is not a suggestion for you guys to buy, sell, or hold a stock. I want you to do your own due diligence. I want you to remember that there are scammers in the comment section. They use my name and my picture. They're trying to get you guys to direct message them on WhatsApp, Telegram, and Instagram. It's not me. I'll never ask you guys to send me money. Always stay safe. So let's get right into it. The market moves one level at a time. The trend, as they say, is your friend. And I don't want you to try to outsmart the trend. That often happens when people are over trading. To validate the market's recent downward move, Monday, we should see a back test on the markets, which means that they'll go up. We want to see it go back up to the 3,900 range on the S&P 500. That was an area that previously had been support. And now, since we broke through it, we want to back test it and confirm that it's resistance. And that would then enable us to go even further down. And at the bottom line is, if we're going to move down, we should fail at 3,900, and then we should go from there. In my short ETFs I'm playing, I'm basically waiting for that confirmation to continue to add to my position. Right now I'm 40% in on those positions. I'm going to add another 20% if we fail that back test at 3,900. I'm essentially in the money, as they say. I can't lose a dime because my entry price was so strategic and solid that it bounced off that level and it's put me in the profit, so I've got the room to move around. Inevitably, as soon as that trade came to pass and people saw that it was profitable, everybody began to ask me, Josh, should I get into it right now? What is your take profit? Well, my take profit on these plays for the SQQQ ideally would be at $70. I'm looking for a really big profit play here. But that doesn't mean that for you to get in right now that it necessarily is safe. This video is meant to answer the question. If you want to take a riskier play, it's riskier than my play because I got in at a great price. I got in at a patient price. But if you want to get in, then potentially look at taking a position if we go back and retest that 3,900 area and fail. That would be the next entry. That's where I'll be adding to my position. I answer these questions. I talk about this over on the MooMoo app in my chat group called Stock Josh Family. If you don't have the MooMoo app, it's available for people in the US, Australia, and China. Right now, they're giving away their best deal, which is 20 free stocks for opening up and funding an account. You also get entered into a holiday sweepstakes where you could win $60,000. I didn't get into MooMoo for those reasons. I got into MooMoo because I liked the platform. You can use it on your phone, your tablet, your desktop. They've got free level 2 data. They got a free stock screener. They've got great news. They allow for communities like the Stocks with Josh community and chat groups like the Stock Josh Family chat group. If you want to join us, there's a link in the top pinned comment. You can try and see if you can win that holiday money. Make it a great year going into 2023 with 60K if you're lucky. And then you can come find us and trade with us. We talk on a daily basis and share trade ideas. All right, let's talk Elon and Tesla. Tesla's crashing right now. I've been talking about this for a long time. I first shared that I thought that Tesla was on a downward trend back on Stock Up with Larry Jones's page. At the beginning of this year in March, I was talking about the fact that Tesla was clearly entered into a distribution phase, which precedes a decline phase, which is exactly where we're at right now. I also want to point out that Tesla back tested the 195 range twice. On December 2nd, it back tested it, it formed a double top. We got rejection on a strategic historic line of resistance. That had once been support, and now it's allowed the stock to break much lower. But even more importantly, I want to point out to you guys that I think we have a head and shoulders pattern on Tesla. The question for a lot of you guys is, okay, Josh, what is a head and shoulders pattern? So I'm going to do a short charting class with you guys. The head of a head and shoulder pattern forms when enthusiasm in a stock's price peaks and then declines back to the point at which it began, near the stock's previous low. Then the right shoulder forms as the stock price essentially tries to rally and should make a new all-time high, but fails to and comes back to that original price, which I'm calling the $195 to $200 range. When it breaks that historic trend line, which it clearly did, it actually broke it and then back tested it twice to confirm the break. That's when it's going to move down a lot more, and that's what we've seen. We've seen a much bigger move down on Tesla. One of the important questions we have to ask ourselves is, Josh, how accurate is a head and shoulders pattern? Why should we even bother to see these shapes in the charts? Well, the head and shoulders pattern is statistically the most accurate price action pattern that there is. When you get that pattern confirmed, there is a 85% chance of that massive decline afterwards, or even a move up if it's an inverse head and shoulders. Since the move has been confirmed in my eyes, the best Tesla could rise back up to right now would be a back test of $167, maybe as high as $180 if the markets decided they want to go up, but that would be a huge maybe. I think that it would be a reasonable play to take a put position at 167 on Tesla. I think that ultimately Tesla wants to go down to $125, as I've shared many times before, and I've been getting the question, Joshua, if it went down to 125, is that the place to buy and go long? I'm going to say right now the answer is no. That's a big place to begin to watch it for an ideal entry. Right now, if I had to throw out an ideal long position entry, it'd be below $100. And I'm going to give you guys a few reasons why. One, Tesla is in decline for a lot of reasons right now. One of them is that it's overvalued. It's overvaluation. The book value of Tesla, which is something I want you guys to begin to look up, companies that you're invested in, compare the market price, which is the current share price, to the book value. Tesla's book value is $25.60. There's a considerable difference, obviously, between where it's at and roughly 26 bucks. That difference is what people are willing to pay for it. That's market value. Book value, just to remind you guys, is what would it be worth if it was sold outright? Every single asset that Tesla owned, what would it be worth? Well, it'd be worth $26 per share. And then you've got another dynamic, which I've mentioned in the past, which is the PE. I think the PE is simply too high for the current market environment for Tesla. That sits at $48.44. It simply means that people are expecting Tesla to have really great earnings moving forward. And that's where we have to ask ourselves, is Tesla going to have its best earnings in 2023 and 2024 when so many people are calling for a recession? I think there's going to be pressure on earnings. And if the earnings aren't great, then it can't justify that high valuation, that higher PE ratio. The other thing to keep in mind about Tesla's earnings is that they are competing with a number of other great EV companies, right? And that means that the competition is going to put additional pressure on their earnings. Now, Tesla is the only EV company, in my opinion, that has mastered scaling their business. They've scaled their business like Jedi Masters, but they're now cutting prices to compete with people like NIO and Lucid and other players. And that isn't even the biggest problem. We all know that Elon right now is not focused on Tesla. He is fighting a monumental culture war over at Twitter. His choices there may ultimately prove to be his legacy. He's basically positioning himself as the champion of free speech. Clearly, that's what he's focused on. And I know that I'm going to get some grief in the comments. There's people that are going to be for Elon, they're going to be against Elon, they're going to be for Tesla, they're going to be against Tesla. I'm only discussing these things for one reason. My reasons are always just practical. They're always just about making money. And we know that Elon is not only in that culture war, but he's also selling his Tesla shares. The market's always interpreted that when CEOs are selling their shares, that they're cashing out. And I think Elon obviously needs the money. That's why he's cashing out. Tesla has been beat up by all of this, but not enough to go long, potentially under $100, which I know is crazy. And a lot of people are going to tell me it's not going to get there. It might not. We're going to watch how it performs after 125. But I think that if it went down to $100, people would begin to say, wait a minute, this company is a pretty cool company. They've got a lot going for them. Maybe we need to get back in. You have to remember that the market remains irrational for much longer periods of time than people typically expect. As they say, that the market can remain irrational longer than you can remain solvent, which basically means that you'll run out of money before the market begins to make sense. So looking to short at 167 bucks on Tesla, and even more at maybe 180 if it got there, but that's a big if. And then that takes me into NIO. This is a bonus conversation on NIO. I just want to remind everybody that I warned everybody that NIO would get up to $13 and it would face really big historic resistance at $13, and that it likely wouldn't break through, not unless they had some major accomplishment. Now it's sitting at $11.60, and I'm going to project to those who are in NIO or interested in swing trading NIO that we're likely to get a bounce off of 11. And then if NIO were to go back up, it could bounce back up as high as $13 or $14, which would give it a double top, a double rejection. And then I think it would go lower unless we get some great news. We've got to keep in mind that the Chinese stocks have actually been doing really good right now, and they've been outperforming the US market. And we have to ask ourselves, why isn't NIO doing as well as some of its other Chinese companies? I want to remind you guys that I gave you the best in class EV play for China, which is the BYD, which is ticker BYDDF. Those guys are likely going to be the ones that institutional investors choose to put their money into, because people are going to be risk off, which is they're going to move to stocks which are safer. So if you want to play Chinese EV, consider looking at the BYD. Guys, that brings me to the end of it. As always, I'm glad to be part of this family with you guys. I enjoy all the interaction in the chat group here and over on the MooMoo app. I'll be closely connected to you guys through the holiday season. I just want to say I love you guys. I enjoy this journey with you. Stay connected. I'm going to be doing videos. My next video is going to be talking about some things going on in crypto, which is really interesting right now. As always, peace and blessings, my friends. We'll see you soon.